Tesla 5 years price target is $1,400.
Tom Nash has just increased his Tesla stock price target in his 5-year bull case to $1,400. Let's take a look and see why he increased his price target.
Now, Tesla's revenues are up almost 600% over the past 5 years. Gross profit up almost 900% for the past 5 years. All while operating expenses only went up by 76% in just 5 years. Now, look at R&D expenses, $3 billion. Look at capital expenditures, $7.5 billion. The company reinvests about $10.5 billion back into its business with an operating income of exactly $12.9 billion before tax. So 12.9 is what they make before tax. 10.5 goes back into the business. The best way to see growth from a company in the future, to predict the growth, is look at how much the company is reinvesting back into its business.
I can say that's definitely the best way to predict if a company is going to be extremely successful, because some companies just simply cannot use the money effectively. But this is where Tesla is very different from other companies. While other companies are extremely efficient at wasting money, Tesla is the opposite.
Look at this. Return on capital for Tesla, it's at 20%. Return on equity is 26.5%.
Some of these are slightly fancy words to describe simple things. Return on equity is the percentage expression of a company's net income as it is returned as value to shareholders. And in red, it calculates the efficiency with which a company generates profit using the funds that shareholders have invested. In other words, the higher the numbers, the better, and Tesla's numbers are really high. Here's a chart from a little while ago comparing all of these automakers, where, for example, Mercedes, which came in as the third highest company with return on capital invested at 14%, is nowhere even close to where Tesla is. And now that it has been a while, we can clearly see that Tesla largely is able to sustain these numbers. Also remember, this is before the Giga Berlin factory has ramped and before Texas factory has ramped, and this is while Tesla is getting ready to build the factory in Mexico. So Tesla is still spending a lot of money for which we are yet to see actual big results, and the results will be huge.
Look at the margins. Look at the ratios. Price to sales, 8.9. Price to book, 16. Price to earnings, 68. This is nowhere near the hype stocks that we're seeing in the market right now.
Here, for example, you have Rivian, and the trailing price to earnings ratio is not applicable in this case because, you need earnings first to have that. It is astonishing that Tesla is able to still grow this quickly, but with positive cash flow numbers, being actually really profitable. And not just slightly profitable, but actually being the most profitable company among all of these automakers if we specifically look at the EV businesses of these automakers. High growth and good profits, usually they just don't mix together, but in Tesla's case, somehow Tesla is doing it.
So this company has almost no debt, massive amounts of cash. Look at this. The net debt for this company is absolutely ridiculous. Negative 20 billion. That means they have 20 billion more cash than debt.
In other words, a bankruptcy scenario is really unrealistic for Tesla. And on top of that, Tesla is immune to a recession, meaning Tesla as a company would be able to go through it without any problems, although the stock may suffer.
Look at the assets to liabilities. Total liabilities, $38 billion. Total assets are 86.8. So the numbers on this company is absolutely out of this world, and they don't pay out any dividends, which is a good thing because it's a high retention rate for the company. The company is reinvesting into growth, and somehow it is still already extremely profitable. In fact, the most profitable auto manufacturer in the market, although Tesla isn't exactly an auto manufacturer. We talked about it multiple times.
A few months ago, Tom said that Tesla's numbers are like video game numbers, and I assume that he would still say the same thing because he has just increased his Tesla stock price target.
Look at what institutional shareholders are doing with this company. Institutional shareholding for Tesla was pretty flat all the way until March 2022. Look at what happened. Institutions like BlackRock, like Vanguard, like State Street, all of them started buying Tesla like crazy over the past year. Look at what they're doing, not what they're saying. So all of them, they hate Tesla, right? But right now, Tesla is at 45% institutional shareholding. And look at the spike and institutional shareholding of Tesla. This isn't a coincidence. They like to talk about how much they hate Tesla, but, judge people by their actions, not by what they tell you that they're thinking or doing.
In the long term, by the way, increased institutional ownership is going to be one of the biggest Tesla stock catalysts to come. Right now, it's still really low because if you look at a company like Apple, it is painfully obvious that there's a lot more room to increase that number. Apple is at about 60%. So institutional ownership of Tesla stock could certainly increase by 50% from where it is right now, roughly.
Now, looking at my valuation model right here, these are my plug numbers for the conservative case, for the optimistic case, 35% growth for the conservative, 50% growth for the optimistic. And these are the margins, discount rate of 14% for the conservative and 10% for the optimistic. And these are my price targets for the next 5 years. Conservative, bear case, $408, currently trading at $265.
I really enjoy hearing someone saying that their 5-year Tesla stock target in a conservative case is higher than where Tesla stock already is today.
Middle ground, $914. And my bull case, Tesla 5 years price target is $1,400, which means I'm raising my price target from $1,200 to $1,400 based on the latest earnings from Tesla, which were phenomenal. Despite what the mainstream media is telling you, the earnings were great. The margins may have come down, but the net income went up, by their revenue went up. The entire company is doing better than ever, so don't let them fool you.
Tom Nash here is making a lot more sense to me than analysts from Morgan Stanley, UBS, and Barclays, who all downgraded Tesla stock but increased their price targets. And now some good news.
We want to start with the big prediction that you made the last time you were on this show. So listen to, you.
By July 26th, we'll have rallied 195 days. There's never been a bear market rally that's lasted longer than the decline. Mm-hmm. So by July 26th, it's proof that we're in a bull market.
Yeah. It just so happens that today is July 26th. We tied the Dow record. So, Tom, are we in a bull market?
Using the data that the other Tom Lee said, it's yes. There's never been a bear market rally that's been longer than the preceding decline. So I would say that is kind of proof, and I believe there's enough fundamental catalysts in the next 6 months to sort of support stocks moving higher.
Of course, everything is just a guess, but if he is right, that would be bullish for Tesla stock as well. What he's saying is that the bear market lasted roughly for 9 months from the beginning of 2022 until the end of September, and now it has been longer since the market has started going up than the time period that it took for the market to go down right here, and therefore we are supposedly now in the bull market, which would be great news for all stocks. We also got more great Tesla stock news, but in this case, it is good Twitter news, but it is good for Tesla because then Elon is less likely to sell more Tesla stock to fund Twitter. X-monthly users, which is Twitter, reach a new high in 2023. Elon just posted that. More users means more advertising revenue on Twitter, more subscription revenue on Twitter, better content on Twitter. Everything is just better.
The ICE business hanging on way more durably than they thought.
Durable.
Right. So the durability there, a durable dollar of ICE is worth nothing-ish, and the EV losses are multiplied. It's frustrating, but Ford and GM are kind of the same story right here. They have to scale up. They know that. This is not news to them. They're trying, but the market's not patient at all.
Sure, some investors can certainly be impatient sometimes, but with Ford, I don't know, they changed their guidance for this year. They now project that they will have a lot more operating losses, $4.5 billion this year instead of $3 billion, which is the previous guidance. When your losses are growing so quickly like that, I think it's justified that investors don't respond very positively and end up selling the stock. Especially when Tesla says, you know what, we are not committing to not cutting our prices anymore.
I think it's interesting, though, that I think that the take is that adoption of EVs is slowing. I mean, like, the rates, and we know what they were. I think it was 70% 2 years ago, 50% last year, expected to be 40%. And, you know, the TAM is still there. I mean, it's still massive, right? But if you're having some of these major automakers with, like, the Ford F-150 electric, it was like, it sounded like a great story, and then they just announced that they're cutting by 17% the prices. And I think when you get yourself in, the early adopters are in. They all own a Tesla, like here in North America or something like that. And I think the next haul is going to be much harder. And now that you're involved in a price war and crude oil and gasoline has come down, I know gasoline's ticked back up here a little bit, maybe there's not all the incentive to go out there and do this thing that's a bit harder than owning an ICE.
I think he got it all wrong. It's not that EV adoption is slowing, it's that EV adoption of terrible or not compelling EVs is certainly slowing down. Elon was also just on Twitter Spaces, and here's one clip from it.
Sometimes people will bizarrely think I'm like right wing or something. I'm like, I've been like literally pouring blood, sweat, and tears next level into saving the environment. What are you talking about? This is so insane. So I at least I perceive myself to be a moderate, and I aspire to be a moderate and reasonable and not to take and like just to care about our fellow humans and further civilization. Part of it also is that the United States has been on top for such a long time. There's a certain complacency that results when you've been winning for the United States really has been winning for so long. Yep. And it's like a pro sports team that has been winning for so long. You get a little complacent,
Yep.
you know, and that's, I think we should be wary of that. We should not be complacent, and you start thinking like there aren't any external enemies. It's just like with ancient Rome. If Rome didn't have an external enemy, they would have civil wars.
Yes.
And so, in the absence of if you just perceive yourself to be essentially invulnerable, then internal conflict is a natural consequence of that, because there are no external enemies. There sort of are, or at least there are external competitors, you know. And we're obviously facing a huge transition that's happening in the world today. Is obviously the rise of China and the fact that the Chinese economy is probably going to be 2 to 3 times the size of the U.S. economy. This is really a big change, because for as long as anyone's been alive, the United States has the biggest economy in the world. But if in the case of China, you simply said, assume a GDP per capita efficiency relative to the U.S. of 70%, that would be roughly equivalent to 1 billion people in the U.S., or 3 times our current population. So the probability is really, China's going to, we will be in a rather odd situation that no one actually can even remember, where there is an economy twice our size.
And YouTube says you should watch this video next, but if you haven't finished watching this video, watch this one first. My name is Mal Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.